All right, let's jump right in. The US economy right now, it's a strange beast. It feels like it's being yanked in two totally different directions at once. On one hand, you've got these massive, super confident bets on what's to come, but on the other, a whole lot of anxiety about what's happening right now. So you have to ask, right? With all these mixed signals flying around, what's really in the driver's seat of the market today? Is it all that optimism, or is it the uncertainty that's winning out? You know, the best way to think about it is it's a tug of war. Seriously, the market is basically this giant battleground between two super powerful opposing forces. So today, let's figure out who's on each end of that rope. Okay, let's get into it. First up, let's look at one side of that rope, the side we're calling the big bets. This is where you see these huge companies throwing down billions, and I mean billions of dollars. That's a huge signal of confidence in where things are headed. And just to give you an idea of the scale here, let's start with a number. $48.7 billion. That's not the total. That's the price tag for just one of the big deals that happened recently. When a company drops that kind of cash, they're not just feeling good. They're making a massive bet that you and I are going to keep spending money for a long, long time. And this is a great example of what that number actually means in the real world. This isn't some abstract Wall Street deal. We're talking about a merger of brands you definitely know. The company that makes Huggies is buying the company that makes Tylenol. It's this massive bet on everyday life, on the American consumer just continuing to be stable and keep buying things. And this isn't just a one-off thing, not at all. You've also got Eaton splashing out almost $10 billion to get bigger in the data center world. I mean, that's another huge bet, right? This time on our digital future. So all of this, it's creating this really positive vibe on Wall Street. You see stock futures ticking up. The big bets team is definitely pulling their weight. Okay, but now we have to look at the other side of the rope, because for every one of those big bets, there's a big worry to match it. And a lot of that anxiety, well, it's casting a long shadow all the way from Washington. So what's the main problem here? A government shutdown that's been dragging on since the start of October. And look, this is way more than just a political headline. It's creating what's basically an information black hole for the whole economy. And that creates this really dangerous domino effect. Think about it. If there's no official data on inflation or jobs, how can the Federal Reserve make good decisions on interest rates? They can't. They're flying blind. And so are investors. This isn't just theory either. It has real-world impacts. You've got airlines getting nervous about the holiday season and millions of people worried about their food benefits. It gets real, fast. What's really interesting is that even the good news feels kind of fragile. Take this new trade truce with China. Okay, so the US lowers some tariffs, and in return, China buys more soybeans and loosens some restrictions. That sounds good, right? But the very fact that everything depends on these delicate temporary truces, it just goes to show how much tension and uncertainty is bubbling just under the surface of global trade. All right, let's swing back over to the big bet side of the rope for a minute, because there is one engine that is just roaring ahead, almost like it doesn't even hear all the political noise and the economic worries. And that, of course, is AI. I mean, the AI boom is for real. Just look at a company like Nvidia. Their stock jumps because the US greenlit a big AI chip sale. And at the exact same time, you've got Google's parent, Alphabet, raising billions of dollars just so they can dump even more money into their AI and cloud projects. You can't deny the momentum here. And maybe, just maybe, the ultimate example of a crazy high-stakes bet on the future is what's happening at Tesla. They're about to vote on a potential $1 trillion pay package for Elon Musk. Now, this is happening even while the company is dealing with stuff like slowing sales in Europe. So this vote, it's really a giant referendum on their entire long-term vision. Okay, so here's the big question, right? You've got all this conflicting stuff happening. Massive corporate deals over here, total government uncertainty over there. So what are the big, smart money players actually doing about it? How are they navigating this? Well, first, let's check in with Warren Buffett.
His company, Berkshire Hathaway, is sitting on a record-breaking pile of cash right now. Now, this isn't panic, it's patience, extreme patience. It's like one of the most successful investors on the planet is sending a signal, saying, hey, I'm just gonna wait for a better deal. And that could mean he thinks prices are about to drop. And then there's the other big reaction, $4,019. That is the price for 1 single ounce of gold, and it has been on a tear lately. It's a classic move. When investors get jumpy about the economy or politics, they run to what they see as the ultimate safe haven, gold.
So this really sums it up perfectly, doesn't it? You've got these two main reactions to this tug of war. You have the Berkshire cash strategy, which is basically a patient bet that something good will come out of all this uncertainty. And then you have the gold rush, a much more cautious move, a flight to good old-fashioned safety. Two totally different strategies, both reacting to the exact same mixed-up economy. And that brings us right back to where we started. You've got this epic tug-of-war going on between incredible corporate optimism and some really deep worries about the economy and politics. So which side do you think is going to win? Are the big bets going to pay off in the end, or are the big worries going to drag everything down? That is the question for the market right now.